Are you noticing more homes on the market and lower mortgage rates? If you're considering buying a home, one of the first steps you may take is getting pre-approved for a mortgage. A mortgage pre-approval involves a lender looking at your financial details, such as your job, income, credit score, and bank statement, to determine how much they're willing to lend you. After this review, they'll provide a pre-approval letter showing the amount you qualify for. Here's why this is so important in today's market. In the competitive real estate market, having a pre-approval for a mortgage can be a big difference in your home buying process. Here's why you should make this a priority before starting your search. So, what is a mortgage pre-approval? A mortgage pre-approval or pre-approval letter comes from a lender and shows the amount they're willing to let you borrow for a home. It's important to remember that this doesn't guarantee a loan. Think of it as a first check to see how much you could potentially borrow. It's like the lender saying, based on what we see now, you may be able to qualify to borrow this amount to buy a home. To make sure your pre-approval is accurate, be honest about your debts, income, assets, and overall financial situation. If not, the lender might lower the amount you qualify for or even cancel the pre-approval letter altogether. So why do you need a pre-approval letter in this current market? With a mortgage pre-approval, you can put in an offer right away. In recent years, sellers has typically received around 5 offers per home. Some homes may only get about 1 to 2 offers, while others could receive a dozen or more. The point is, it's hard to predict how much interest a property will attract. If it's a good deal, you can expect the seller to get multiple offers. So, how does this relate to mortgage pre-approval? It's crucial. Your real estate agent won't and shouldn't submit an offer without knowing you're pre-approved. By the time you get your pre-approval letter, the seller might have already accepted another offer. If you already handled your pre-approval process, your agent can quickly submit an offer after showing you a home, sometime within hours, giving you a better shot at getting the property you want. Technically, you can view homes without a pre-approval, but many agents won't schedule showings unless you provide a pre-approval letter. Even if your agent agrees to show you homes, the seller agent might decline your request without the letter in hand. Understand your budget. During the pre-approval process, a lender will figure out how much you can borrow and give an estimate of your monthly mortgage payment if you borrow the maximum amount. One of the main advantages of getting pre-approved is that it helps you understand what you can afford. Lenders review your financial details like your income, debts, and credit score to determine the loan amount you qualify for. This allows you to set a realistic budget and focus on homes within your price range. Keep in mind, the estimate can change depending on factors like the purchase price, interest rates, and property taxes of the home you choose. However, the numbers from the lender provides a good starting point to guide your search. For instance, if you're approved for $350,000, it's best to focus on a home at or below that price. Expedite the closing process. The best lenders do a thorough check during the mortgage pre-approval process. Because of this, they will already have many of the documents needed to help you close the deal. Having strong financing in place can make your offer more appealing to sellers and improve your chances of getting the home you want. Since pre-approval includes a detailed review of your financial situation, the pre-approval process tends to be quicker once you find a home and make an offer. This can be a big advantage in a fast-paced market where any delays can mean losing out on the home you want. Having a stronger negotiating position. Pre-approval straightens your position as a buyer. Sellers and real estate agents view pre-approved buyers as serious and financially stable, making them more likely to consider your offer. In a competitive market, having a pre-approval letter can set you apart from other buyers who haven't taken this step. Identifying potential issues. Going through the pre-approved process allows you to identify and address any potential issues with your credit or finances early on. This proactive approach can save you time and stress later, ensuring a smoother path to securing your mortgage. Enhance confidence. Knowing you are pre-approved provides a peace of mind and confidence as you search for your new home. You can focus on finding the perfect property without worrying whether you'll qualify for financing. How does pre-approval qualification work? During the pre-approved process, a mortgage lender takes a quick look at a borrower's financial situation to see if they're a good candidate for a loan or credit card. Depending on the loan type, this can lead to either a soft or hard inquiry on your credit report. For example, you might get pre-approved for a credit card sometime without applying, without affecting your credit score. However, pre-approval for a mortgage usually involves a hard inquiry, which can lower your credit score. Pre-approval often includes key details like an estimated interest rate and a maximum loan amount. After being pre-approved for a loan, you'll submit the official application. At this point, the lender will conduct a hard inquiry, if not already done, and look deeper into your credit, employment history, and debt-to-income ratio to decide if you qualify. Mortgages often shows the most variations between pre-approval and final approval because they involve secured capital, which add more factors to the underwriting process. For a mortgage, the lender looks at your credit score and two key ratios: debt-to-income and housing expenses. The value of the secured property, often determined by an appraisal, can also affect the loan amount. How mortgage pre-approval works. Mortgage pre-approval is a more detailed process compared to other type of loans pre-approvals. It typically involves a hard inquiry on your credit report, which can temporarily affect your credit score. In addition to the credit check, pre-approval requires a review of your overall finances. You'll need to provide information about your job, income, assets, debts, and other financial details to help the lender decide if you're a suitable candidate for the loan. Once you're pre-approved, you'll receive a letter showing the amount you qualify for, the estimated interest rate, and the expiration date of the pre-approval. If you haven't found a home by the time it expires, you may have to go through the process again. Qualification for pre-approval. Your credit score plays a key role in getting pre-approved. Each lender has a minimum score you need to meet. For example, a conventional mortgage usually requires a score of at least 620. Besides your credit score, lenders will also check for negative marks like missed payments or delinquent accounts. If you have a history of these, it may affect your chances of a pre-approval. Other important factor includes your employment status, income, and debt-to-income ratio. While specific requirements may vary, a common guideline is to have a debt-to-income ratio of 36% or less. How long does it take to get a pre-approval for a mortgage? It can take anywhere from minutes to upwards of a week to get a pre-approval from a mortgage company. The time it takes depends on your lender and your financial situation. If you have good credit and work with an online lender, you may be able to get pre-approved in just a few minutes. However, some lenders may require that you work with a loan officer to get pre-approved. If that's the case, or if your financial situation isn't as straightforward, the process could take several days up to a week. So what's the bottom line? Pre-approval is a crucial first step in qualifying for various types of loans or credit, including mortgages, auto loans, personal loans, and credit cards. It helps you understand if you'll be approved for a loan and what the maximum loan amount and interest rate might be. However, it's important to remember that pre-approval does not guarantee final approval or that you will get the loan amount or interest rate stated. Pre-approval is especially useful when you're comparing lenders. It allows you to find a lender that gives you the best loan terms, interest rate, or loan amount you need. Thanks for tuning in. Discover more about Las Vegas and Henderson with our free relocation guide. For additional details or a free consultation, visit my website or social media. Find all the links in this podcast description. Also, I love hearing from our listeners. If you have any questions, comments, topic suggestions, or real estate stories to share, please reach out to us. You can follow me on my social media pages. Just search for Long's Real Estate, local realtor in Las Vegas and Henderson, Nevada. I will also save the links in the description of this video. Until then, remember, in Las Vegas and Henderson, the odds are always in your favor when you have the right real estate agent by your side. Thanks for joining us today. See you next week.